almost all of them could be more aggressive with their investments than they think they can be. If you are going to serve on active duty for 20 or more years, if you are going to leave the service with a pension, the value of that pension is the functional equivalent, depending on how long you served and how senior you got before you retired. The value of that pension is going to be, notionally somewhere between $500,000 and $2 million in basically sitting in bonds.
Welcome to the Military Money Manual Podcast, where every episode is all about achieving financial independence in the military faster than before. We believe personal finance shouldn't be boring or intimidating. Building wealth can be simple, and financial freedom is the ultimate financial goal. Now, here's your hosts, Spencer and Jamie.
Hello, everyone. Welcome back to the Military Money Manual Podcast. I'm Spencer Reese from militarymoneymanual.com. Today on the podcast, we've got Sean Gillespie from the Military Financial Advisors Association. Sean began his second career as a financial advisor in 2013 after 20 years of active duty Navy service. After practicing solo for 5 years, he partnered up to found Redeployment Wealth Strategies, a fee-only financial planning and investment advice firm that specializes in serving military service members and their families. We're excited to have Sean on the podcast to introduce the Military Financial Advisors Association, or MFAA. We've had a few other members of the MFAA on the podcast before, including Eric Baskin, Brian O'Neill, and Daniel Kopp. We're excited to introduce the MFAA to our listeners because we think they can be a great alternative to some of the less desirable financial advice firms out there that prey on military service members. All of the members of the MFAA are fee-only fiduciaries and either certified financial planners or working on their CFP designations. Sean, thanks for joining us on the podcast today.
Great to be here. Looking forward to talking.
So I think we'll get started with the main theme for today, and that's the MFAA, or the Military Financial Advisors Association. Why don't you tell us a little bit about what you guys are doing over there at the MFAA?
So first off, over there is all over, right? All of the member firms are scattered all over the country, typically located at or near some kind of what we Navy sorts would call a fleet concentration area, someplace where there's soldiers or sailors or airmen or Marines nearby. Because it's the 21st century, a lot of our firms are doing quite a lot of the work virtually as well. So short version is we're a nonprofit business association. Our mission is to advance the profession of financial planning, not the industry of financial services, but rather the profession, and to provide, fiduciary service to military service members and their families for financial planning and investment advice.
What was the genesis of MFAA? Like who went to who, and how did it get started? And what kind of time frame are we talking about here?
Yeah, that's a fun story. Our original Pied Piper was a guy named Scott Vance, who has since left the profession. But Scott was one of our colleagues at the XY Planning Network annual conference in St. Louis in 2019. So at XYPN Live, he recognized there were a dozen or so folks at the conference who had military backgrounds. And so he just basically put a pin in the calendar and said, hey, any of the military folks who want to meet each other, be here at this time. And so about a dozen or so folks showed up. And that was, basically the start of what became the Military Financial Advisors Association in 2020, when we decided to make a more formal organization out of it, rather than just kind of a loose confederation. So to have the ability to put up a website to make it easier for military families to find fiduciary advisors and that sort of stuff. But yeah, Scott was the main guy. The guy who who's really the glue these days is my partner at Redeployment Wealth Strategies. Paul Allen has really kind of been the driver ever since 2020, and making sure that none of MFAA's check balance or anything like that. Make sure that the website stays up and running and that sort of thing.
It sounds like a really good resource. Are these certified financial planners and CFPs that are on the team, or does it vary of their experience and designations?
Just about everybody in the association is a CFP. I am probably the most prominent exception. I've been in this line of work for 10 years and I'm not a CFP yet. It's a longer story about go get your education done first before you get into this line of work. It doesn't get easier to go back. But yeah, just about everybody in the association is a CFP certificate. Yeah, we can talk a little bit more about what's important about that. It kind of winds its way around the importance of fiduciary service, but also the just the technical proficiency that comes from just a really solid academic background to underpin all of the work that any of us do for any of the clients that come across our doorstep.
Yeah, we've had a couple other CFPs on the podcast before, but can you just kind of at a high level tell us, like, if someone is going to work with a financial advisor that has the CFP, the Certified Financial Planner designation, what can they expect in terms of their academic background and the experience that they're bringing to the table?
Well, so in terms of sitting across the table from a client, I don't know if I would go quite so far as to call it the gold standard, but if we have a gold standard for service to people, CFP is it. There's certainly not a more rigorous certification, in terms of the different kinds of material that a CFP has to master to earn the marks across the spectrum, right? Taxes, investment, insurance. I don't know that cash flow is one of the things that's more of an AFC core competency, but basically to understand how all of the pieces of a financial plan fit together. For the longest time, inside the investment advice or financial services industry, quite a lot of almost all of the service for a long, long time was oriented exclusively toward the recommendation or the management of investments. In the last 50 years or so, with the advent of the microchip and all of the things that we can do to analyze and store and process information so much faster than we used to be able to do, planning has really come to the fore over the last couple of generations. Just because we have more time to do it, because trades that used to take 3 days to get placed after passing, through a few dozen people's hands on pieces of paper now get done in seconds. And all of the management of those accounts is done digitally, by one person managing, hundreds of accounts, where it used to take lots and lots of people to do it. So we, meaning Homo sapiens, right? We've figured out over the past 50 or so years that there's quite a lot of value in putting a comprehensive plan in place and doing the investment management that the industry's been doing for a long, long time in that context. We, meaning those of us alive right now, we're just fortunate to be alive at this point in history where, we actually have the opportunity to operate in that fashion because, we've just got time to do it now.
Right. And the technology. And we basically, we're at the peak of 2 million years of human evolution and civilization. And this is really the first time in history that A, we've had the resources, and B, we've had the time, and C, we have the data that we can say, this is a plan and it has this probability of working or this probability of not working. And that can be great, right? That can reduce anxiety for some people, but can also lead to a lot of anxiety for other people.
Well, and the big thing to me, and those of us who are in the profession now, 10 years in the profession, I'm fairly young. Among, I walk into a room full of advisors. I'm probably right around the 50th percentile in terms of how old and how long in the industry and whatnot. But we youngins have a tendency to look at our forebears and say, I can't believe you guys do this way still. Well, 30, 40 years ago, when some of those guys were starting to cut their teeth in this industry, these tools, the internet, none of this stuff existed. It's easy for us to say, well, this is the only right way to do this, right? I think it's the best way to do it. I think if you have the ability to learn how to do it this way, that to me, at least, it doesn't make any sense to have an investment plan that's not connected to the rest of your financial plan.
So speaking of the best way or the right way to do it, you used the term earlier, fiduciary. Can you explain what that term means and why it's important to military families to keep that in mind?
Sure. I think it's actually important for everybody, but military families in particular, because quite a lot of our compensation in the military profession is in the form of a pension, right? So we don't tend to be a tribe of people that is typically asset rich. And because of that, for a long, long time, the only way for military families to be served by any kind of financial pro was on a commission basis. Short version is when somebody is operating on a commission basis, they're being paid by the investment company whose funds they sell you, not by you. So there's kind of an unavoidable conflict of interest there, right? Any time that's the basis somebody's working on. And so the point to being a fiduciary is that you have the requirement to act in your client's best interest, to put your client's interest above your own, and make sure that on a given day, right, the thing that you are recommending is the best thing as best you can discern it for their plan. It doesn't actually mean that you can never work on a commission basis, but when we talk about being fee-only planners, there is a by law fiduciary requirement that attaches to working on a fee basis where your client pays you directly, and then you operate accordingly, right? In their best interest on every recommendation you make inside the plan.
So if someone is not fee only, they're making, or there's a potential that they're making a, say, percentage off of the sale of a certain fund or stock, ETF or whatever you're buying with someone that could even call themselves a financial advisor and use the term financial advisor, and they're making a large commission off of what they sell you, the product they sell you, or the service they sell you, like an insurance policy or something like that.
Right.
Versus a fee only being traditionally more as paying for your time. I'm going to pay you an hourly rate for your time and for your help on a situation. Is that a good summary?
Yeah, pretty close. I mean, at least in the investment industry, in brief defense of people who work on a commission basis, all those commissions are required disclosures. It is not the case in insurance, right? Those commissions are, quite a lot more opaque, but it is what is. I mean, if you're upset about commissions inside the life insurance industry, you might as well be upset at the ocean for being wet and salty. But, anytime that you're working with a fiduciary, if there is some kind of commission involved, it's going to be a required disclosure. Certainly the CFP board, I mean, they require all of their certificates to act as a fiduciary all the time. And so all that means is if there is going to be kind of a unicorn product that might be the best fit inside your plan, and it happens to have a commission attached to it, then you disclose the conflict of interest to the client. You make sure that this is still working inside their plan and, in their best interest. And just actively disclose it and resolve any of those conflicts in the client's interest.
What does that disclosure look like? Where should they be looking for? Is it a conversation where the advisor is going to say, hey, I think this fund is a good fit. Full disclosure, I do make a commission off this. Or is it one of the paragraphs in a 46-page terms and conditions that they always make a sign that we all read diligently,
It's quite a lot more often the latter, which is why those of us who stick to a fee-only model stick to that model, is to just not allow that conflict into our client relationships. The fee-only crowd, we are the sanctimonious wing of the financial services industry. We got there honestly, but we're also pretty unapologetic about it for that reason. At the end of the day, you can't ever have a completely conflict-free relationship with a client. But the fee-only crowd, we're pretty dedicated to crowding as many of those conflicts all the way out up front as we can.
So it's there in the name, Military Financial Advisors Association, but what connection do the advisors in the MFAA have to the military?
Well, so the short version is, we all came from the tribe in some fashion. I mean, every member of that association either served or is the spouse of someone who served. And a couple or three of our members are both of those, are both veterans and military spouses. So that was the first thing. That was kind of one of our, conditions of membership, was that people come from the tribe, that we don't have any sense that we could teach somebody what it's like to live a military life without them having experienced it.
Right.
So that was the first piece, was just that people come from the tribe. And then the other condition, the other requirement for membership is that everybody be a fee-only advisor.
So if I'm looking for an advisor, if I want to have start a conversation with a financial advisor, and I think, someone who understands the military life, understands PCSing, understands that a lot of my pay might be untaxed allowances, is it important to work with someone who's in my local area, or has the miracle of modern technology kind of liberated us from that and you can go and work with someone who's maybe not even in your time zone?
Certainly technology has opened that up quite a lot. I think every one of our member firms works virtually with at least one client. At RWS, I think our record was 11 time zones away, so like almost the maximum. We had clients in Thailand before they PCS'd back to the States, and when they PCS'd back to the States, we fired them as clients, and we brought the spouse half of the couple actually aboard the team as one of our planners. But certainly, for people who are comfortable working, virtually across a computer monitor, it's quite a lot easier to do that than it would have been even 10 or 15 years ago. Some folks just prefer face-to-face, and if it's a face-to-face relationship that you want, it's easy enough to screen for, okay, who's the one that's closest to me.
What does the typical relationship with either the onboarding process or what's the process to a fee-only conversation? Let's say I just want help with some tax planning or a complicated investment. I just got a big bonus from the blended retirement system or something like that. Can it just be as simple as a 1 hour conversation, or does it need to be a 1 year or 10 year kind of relationship?
Yeah, it certainly can be an hour or two. I will tell you that the more mature a firm gets, the less likely that they're going to have capacity to do that. But there's always enough new folks in the profession, who are just getting their teeth cut, that you can usually find a couple hours worth of help for a thing that you need, if that's the thing that you want. As a business matter, I mean, every advisor on the planet wants to have a 10-year relationship or more with clients. If you determine that an advisor's service model is going to look or feel like a set of handcuffs, you should probably just keep looking. Certainly, at our firm, we tell people we like to work with folks for at least a year, but we've had folks leave before a year was up, and we've never said, oh no, we've got this contract. If people have gotten what they need from the service, then there's not typically a lot of value to continuing to pay for something when you've already got it wired.
When might a military family or a service member want to think about working with a CFP? Is it early in the career, middle career, towards as they're approaching retirement? Is there kind of like a net worth threshold or an income threshold where it can start becoming worth their time to have the conversation?
So I'll be very candid about my personal bias on this. I'm able to do this professionally because somebody grabbed me by the scruff of my neck when I was 24 and dragged me to a rubber chicken dinner on a Wednesday night that the company that became First Command put on. And so I cut my teeth as a client very young with no assets to my name. And because of that, and just basically building, my personal financial plan into our monthly budget, I had the freedom to do this, when I retired from Navy. That said, it's a pretty personal decision. We've had people come to us as young as early 20s, Navy second class petty officer, I think is the most junior that we've seen walk in the door. We've had other people come to us in their 50s. Most folks who come to us think that they're starting too late. Almost all of them are incorrect. In terms of an asset threshold, certainly I think that's probably been the most important change in how the newer cohort of advisors these days serve people. It used to be the thing that got you in the door, right? And at some firms it still is. There's one that's really famous for telling consumers, we do better when you do better. They don't tell you that something on the order of like $500,000 minimum just to get an appointment. So, I don't think there's a pat answer to it. Usually what brings somebody in the door is a thing, right? So your earlier scenario was, hey, I got this bonus and I don't know what to do with it. It's some like near term kind of tactical question. There's very few people who walk in the door who say, hey, I'm 24 years old. I want to make sure I can retire when I'm 70. Right? If they do get in the door when they're 25, right? What my team and I, what we're working toward, if we're serving somebody that early in life, is, well, why not 50 or 45? Right?
Yeah.
So it's it's a really long answer to a short question. There's no real pat answer. The big thing that I always advocate for, again, just going back to my personal bias, is the earlier you start doing this in some fashion, right? Guided or unguided, right? The important part is not that you work with a planner. The important part is that you just make investing a habit early in life. And the earlier you do that, the more freedom you're going to have to do the things that you want to do, and sooner rather than later.
Sean, what about estate planning? Is there a role for a CFP on the team, especially if you have a more complicated estate, you want to set up a trust or special needs trust or split families or any kind of situations like that? Is there more out there than maybe the free resources on Base that some people should consider?
Almost certainly. The free resources on Base, you can walk on just about any base on the planet and get a will done pretty quickly. It is a very, very rare day that the legal service office is going to have the expertise to put a trust together for you. Now, oh, by the way, a CFP can't establish a trust for you either. That's lawyer work. Lawyers get really crabby when CFPs start doing lawyer work. But to answer your question, yes, I think there is a role there for an advisor to help guide that discussion. And certainly once those trust arrangements are figured out, right? Whether it's, blended families or special needs or just, trying to keep assets out of probate after you take your last breath and just make that transition easier for your kids, getting all of the accounts, getting everything titled properly and whatnot. Yeah, there's a lot that a CFP can do to help that process and especially just to guide the conversation. The lawyers, CFP might be charging you on an hourly basis. They might be charging you on a subscription. They might be charging you for managing assets and just baking in the advice for doing that. Your lawyer is probably charging you in 6-minute increments. So, we know enough about estate planning to at least guide those conversations in maybe a less hurried fashion.
And I want to be clear, though, for listeners that don't have a will yet, please go get something, even if it's the free version at the JAG office, and then you can always come back and refine the process. But don't wait for the perfect appointment or the perfect advisor to get a will, especially if you got a deployment or something like that coming up.
Could not agree more.
Something written down is very, very important for your family.
Yeah, couldn't agree more. One of my partner, Paul, one of his favorite quiz questions for people is it's just a true or false question, right? True or false, you have a will. And sometimes people will say false. It's like, nope, you have one also. If you take your last breath without having written one down, the state where you die will be very happy to tell your family what's going to happen to all your assets. That's going to be your will.
Sean, what are some of the most common errors you see service members making, either during the process of advising or before they walk into your office?
Well, in terms of error, no kidding errors, we just covered it. It's not having the will written down and being really intentional about what do we want to have happen in the event that I'm not here tomorrow. Quite a lot of the rest of it, I hesitate to call it mistakes. There are things that people will do when they don't have benefit of professional advice that are less efficient. But there's very few of those things that manifest as actual errors. And not least, certainly as an advisor, it's a rare day when I'm going to, if somebody does make an actual mistake, then I'm going to tell them that it was a mistake. We don't do any of our work in the rearview mirror, right? All of our work is out the front window. Probably the most common, especially for the younger folks. And by younger folks, I would say like a good working definition of younger folks for me at the ripe old age of 53 is anybody who's still on active duty, including the flag and general officers. Almost all of them could be more aggressive with their investments than they think they can be. If you are going to serve on active duty for 20 or more years, if you are going to leave the service with a pension, the value of that pension is the functional equivalent, depending on how long you served and how senior you got before you retired. The value of that pension is going to be, notionally somewhere between $500,000 and $2 million in basically sitting in bonds, right?
Yep.
In, nowhere near a stock market. So It doesn't show up on your balance sheet that way. It never will. But when we look at your portfolio in that context, it is almost impossible to be any such thing as too aggressive.
Right.
Our entering argument for our active duty clients is 100% equity. Right?
Wow.
Now we might back off of that just to help them sleep better. There's meaningful, sleep benefits that you can get out of an 80-20 allocation that, if you're uncomfortable with what you perceive as a roller coaster, where we can get most of the benefit and maybe not have quite as lively a ride sometimes. But that's the big thing that we see is people can almost always be more aggressive. It's when you start taking money out of your portfolio later in life that you've got to allocate a little bit differently. And especially if you're going to be relying on the money that you're taking out of your portfolio to buy the groceries, to pay the mortgage, to pay for your needs, right? But for quite a lot of us who have a military career, all of our needs are being met by military pension, whatever VA disability, you might have. And especially when we start rolling in Social Security on top of that. So once folks understand that, that's, almost always like the first adjustment that we're making with most clients that get in the door is just understanding the asset allocation piece of it.
Just a quick note from one of our sponsors, and we'll be right back to the show. Hey, Spencer, I've heard about this free Amex Platinum card for military service members. Where can I go to learn more about this?
Great question, Jamie. I've got the Ultimate Military Credit Cards course at militarymoneymanual.com/UMC3. It's a 100% free email-based course, and I explain exactly how to verify your eligibility for credit card annual fee waivers with the Military Lending Act, or MLA, and the Service Members Civil Relief Act, or SCRA. The Ultimate Military Credit Cards course is a beginner's guide to travel hacking and opening up your first annual fee-waived credit card while you or your spouse serves in the U.S. military. There's no spam, no fluff, and the only emails you'll get from me are related to military credit cards. You can unsubscribe at any time, and there's zero cost to you to sign up. You can sign up right now for free at militarymoneymanual.com/UMC3. Again, militarymoneymanual.com/uniform Mike Charlie 3.
And now back to the show.
Do you ever work with clients, like let's say there's a Air Force pilot or a Navy pilot, and they're facing the decision of taking a $50,000 or $40,000 bonus per year to stay in or to get out and go fly for the airlines or go start a civilian career? Do you ever have clients like that? And what kind of questions do you have for them to kind of tailor your advice or to just help them think through the decision-making process?
Well, certainly the first thing that I tell almost everybody for just about every decision that we make inside their plan is that no matter what we decide today, no matter what we take action on today, next week, next month, we're probably going to regret something later. So financial planning is not very different from military planning in that respect, in that our main job as planners, whether it's financial or military planners, is to manage risk. And, so our approach to risk is understanding that no matter what, we're probably going to regret something later. So let's be very, very intentional about what it's going to be right now. Let's choose those regrets ahead of time when we're thinking about this, more objectively. Because once you're neck deep in it, it's going to be all about, okay, which stage of grief am I in? Those decisions get made very, very differently when that's what you're neck deep in. So that's the first piece, is just understanding, we're probably going to regret something later. So let's choose very, very deliberately what that is now. In terms of like what kinds of questions to ask, it depends on the scenario. So for the example that you gave, for example, somebody making a decision to take a pretty hefty bonus to stay in or to pull chocks and go fly for the airline. It's like, okay, well, how important is the military pension to you? How important is it to you to have that guaranteed inflation adjusted source of income that's just going to keep showing up every month after you've taken off the uniform? Is it important to you to have that right away, when you retire directly from active duty? Or is it acceptable to you to transition to the reserves and not have that pension until age 55 or 60, for example? And it's just a matter of kind of the common denominator is anytime we're asking, the questions that we need to ask to help determine, okay, what's the decision that we're going to make here, is to just help the client figure out what's the most important thing to you here. That's what all of the questions have in common is, for whatever it is that we may not have already talked about, is to determine what is most important to you. And then from there, to start making the decisions, that support that most important thing. And that's not, by the way, that most important thing is not always the thing that is financially the best thing. The part that matters to us is not that each and every decision that you make is going to be the best financial decision. We do want to make sure that it's not going to be financially ruinous. We want to make sure that it's a sustainable decision that you're getting ready to make. But at no point in the engagement with any client do we want the financial plan to be the tail that's wagging the dog. We want the financial plan serving the life plan, not the other way around.
So does that mean that you don't necessarily tell everyone to take all of their bonus and invest it all in, 99% equities? Or is there some enjoyment to life do people come to you with this pressure to invest and have a great investment plan, and you actually are like, okay, slow down, let's enjoy some of life a little bit? Do you ever have that problem?
One of the 4 planners on our team, right? So Paul and I founded the joint in 2018. We've got 4 planners that support us. Every one of them has their own respective superpowers. One of them, Carol Pittner, her superpower is getting people to quit. Right. and so yeah, there's days when people walk in the door for the first time as a client, and they want to know, it's like, well, I want to know, when can I retire? And, we kind of spread everything out, look at it. It's just like, well, would you like to retire today? Right. Right.
It seems like a real struggle for some people to transition their mindset to that.
Oh, it totally is. It totally is. I mean, we've had folks where, we're telling them, on day one, it's like, well, you can quit anytime you want. And it usually takes people a little while before they believe that. Oh, by the way, when people do quit, right? Because certainly when I left Navy, right, I was looking forward to the transition. And my last day in the office, my last day at work, I cried like a little kid whose puppy just died on the way out the door. You're going to grieve that transition, even if you're looking forward to it. So yeah, the mindset shift is it's not a thing that a lot of people actually make very easily.
So Sean, where can people find more about MFAA and the advisors in the association?
So it's a transcontinental web address, but it's not especially difficult. It's militaryfinancialadvisors.org. And, all of the words are just like they sound. It's advisors with an O at the end of it. There's no spaces. And from there, once you're on the website, it's pretty easy to navigate. And for example, if you're looking for an advisor, it's pretty easy to page through everybody's profiles. For people who are thinking of getting into the profession, certainly that's one of our objectives is helping military people who want to join the financial planning profession, is to help provide guidance, any kind of mentorship. In some cases, it has manifested as job offers for folks, like I was talking about earlier with one of our clients. And this year, we actually have our very first, the association has its first Skillbridge intern. So a retiring, he's not yet officially retired, Marine officer, Omen Quelvog, became our first Skillbridge intern with the association this year. So he's working with Adrian Ross at Clear Insight Financial Planning, and then we've got a couple others. One who just started with us at RWS, and that's the thing that we're probably most excited about inside MFAA is getting that approval to be a Skillbridge partner, so that we could start teaching the next generation of advisors to do, what we consider to be real financial planning, and not, hey, what you really need in your life is more whole life insurance.
And Sean, where can people find you and see what you're working on?
My firm is Redeployment Wealth Strategies. The web address there is redeploymentwealth.com. I can be found on LinkedIn. I can be found on Facebook. I'm, no less opinionated in those arenas than I have been here for the last 30 minutes. So yeah, easy to find. And then email is pretty easy. It's just Sean at redeploymentwealth.com. That's SEAN, Sean.
Sean, we really appreciate you coming on the show with us today and talking about fee-only advisors, the Military Financial Advisors Association, and what the term fiduciary means and how important it is to, especially our military listeners, but really for everyone to understand as they go out there and try to solve the challenges of saving for their future. I learned a lot from the conversation with you, and I think our guests will really enjoy today's episode. So thanks one last time for coming on the podcast with us today.
Thanks again for having me. I had a blast.
Thanks so much for tuning in to this episode of the Military Money Manual podcast. If you're enjoying the show, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. This helps others find the show, and we really appreciate it. Thanks again for tuning in, and we'll catch you in the next episode.
The views and opinions presented here are those of the speakers and do not necessarily represent the views of the DoD or its components. Reference to any commercial products or services does not constitute DoD endorsement of those products or services.